What I discovered in July of 2008, and then when I began to implement this process in our lives, I got pretty aggressive with it. I started putting money into these policies, and then I was borrowing in the form of policy loans and taking that money and going down to the conventional bank and saying, can you take this lump sum of money and apply it directly to the principal balance of my mortgage? And the banker would say, back in April of 2008, you could still get a 40-year amortization schedule on a mortgage. And when my wife, Rebecca, and I moved back to Canada, because I was on an international work assignment at the time. I was a senior partner with Dell. My wife and I were living and working in Tampa, Florida. And when we got pregnant with our firstborn, we decided to move back to Alberta. And the home that we purchased, we thought, oh my God, this is fantastic. Got a 40-year amortization schedule. Interest rates were remarkably low. And so I was pretty proud of myself. I was like, hey, this is really good. And you know what I was going to do at the time, Sarblo? I was going to accelerate my mortgage payment. I was going to put my mortgage payment in overdrive. I was going to send an extra $200 every month to accelerate the repayment of that mortgage. I had no idea what the problem was. I had no exposure to becoming your own banker in April of 08. My first exposure wasn't too long afterward. It was in July of that same year, but I had no idea what the problem was. So if somebody would have sat down with me and said, hey, Jason, you should purchase dividend paying participating whole life insurance policies, and then you should begin to implement a process and become your own banker, I would have said, what are you talking about? I got all my money in really good stocks and I got all my money in RSPs. What are you talking about? But if somebody had come to me and said, Jason, do you understand that every payment that you're making to that conventional bank is a permanent transfer of money away from you? You can't earn interest on it, can't use it again. It's not only permanently transferred away from you, but it's also permanently transferred away from every generation that comes after you. Do you understand, Jason, that that's a problem? I would have said, you better believe it. And if somebody would have clarified for me, hey, Jason, do you understand that you're earning a whopping 0% on the equity in your home? All that you're doing by sending an extra $200 of your money every month to the bank is you're saying, hey, Mr. Banker, don't worry about going out to find another borrower. I'm just going to send you a bunch of extra money. And do you know they hate you for doing that? They don't like that. The banks do not like it when you're paying off stuff early. They do not like that. What I discovered in July of 2008, and then when I began to implement this process in our lives, I got pretty aggressive with it. I started putting money into these policies, and then I was borrowing in the form of policy loans and taking that money and going down to the conventional bank and saying, can you take this lump sum of money and apply it directly to the principal balance of my mortgage? And the banker would say, sure, but do you understand that once you achieve a certain amount, like you're going to be subjected to a penalty? And when people hear the word penalty and they're standing in line at the bank, that can create anxiety, fear, anger. And I thought to myself, okay, well, what's the penalty? Well, it's 3 months of interest. Yeah, but how many years did I shave off of the amortization schedule? 3. Okay, so I can pay a $900 penalty and I can shave 36 payments off of the amortization schedule. I'm going to go get a coffee and you take all the time you need to tell me what you would do if you were in my shoes. We got rid of the conventional bank in 7 years, 33 years ahead of schedule. However, when I called Nelson and I said, Nelson, this is incredible. We got rid of the conventional bank and we're going to celebrate. And he said, whoa, hold on, son. Don't celebrate yet. I need you to finish the original loan schedule. And I said, could you help me understand what you mean? He said, you committed to making payments for 40 years. Now that you've created your own system, you're not going to honor that original loan schedule? Because if you don't, your expenses are going to rise to find that new free cash flow. He said, I want you to be an honest banker and I want you to finish that original loan schedule. You're just going to change the process of who's getting all that money. To this day, we still own that property. We live in our second home now. And that original property is leased out to a wonderful family. And the payment that we would have otherwise been obligated to continue making to someone else's bank is now flowing back into our system of policies, and it can never leave our control. In hindsight, I may have done it differently. I may have utilized some of that accumulating value to go and take advantage of high caliber opportunities, maybe to grow my real estate portfolio. But my sole objective at that time was to get rid of the conventional bank. I wanted to lead by example. I wanted to get it done. 33 years ahead of schedule isn't that bad. God forbid, if anything had happened to me during that 7-year time frame, I would have left no indebtedness behind to my family. They would still own the property. and they would have a tax-free windfall of money. And so I left no debt behind. If you have any difficulty with debt, okay, so if you look at a policy loan and you say, well, in my understanding of finance, that's a debt. If you have any difficulty with debt in your life, you just don't trust the asset. That's what you have difficulty with. You don't trust the asset. And I'm here to tell you that this asset is remarkably impressive because it just keeps getting more efficient. It just keeps getting better day in and day out. And so I have no difficulty with policy loans because I view them to be an asset. Remember, I co-own the insurance company. Policy loans are a net contributor to the earnings of that company that I co-own. So if I have a choice, if I have financial energy called money, and I know that that money has to reside somewhere, where do I want it to reside? Inside of my business or someone else's? Well, logic would dictate I want my money residing in my business, and I can use someone else's capital to go and take care of all those financial objectives that I want to get achieved. Nelson said that the process of becoming your own banker is ridiculously simple. It's not meant to be sensationalized. And sometimes we interact with people where we're explaining the problem, describing the solution, and people can't see the simplicity yet, right? They haven't caught it yet. They haven't caught the essence of what becoming your own banker is all about. And so they may perceive like, what are you trying to sell me? Like, get to the point, sell it to me. Like, what exactly is it that you want to sell me? What we're wanting to do is we're wanting to unlock your thinking. We want to open up your eyes to a whole new financial world that you didn't even know existed before.